Greetings, my name is Ted Hicks. I'm the founder, CEO, and Chief Investment Officer for Hicks Associates Wealth Management. This video is designed to be part of our introductory series, really designed for new clients or prospective clients to get a better sense of who we are and how we operate. Now, in general, our asset management process is designed to minimize drawdowns while capturing upside momentum. So how do we do that? Well, in particular, this video is going to introduce you to one of the tools that we developed to help us in that objective. On the screen right now is the S&P 500, which I'll be using throughout today's video. At the moment, this is a daily candle chart, so every candle on the screen represents a day in time for the S&P 500. I'm showing 1999 through 2002 because I started my practice in February of 1999. Now, if you remember that year, that was the last year of the great bull market from the 1990s. Then we had the dot-com crisis, which resulted in 3 years in a row of losses. 2000, 2001, and 2002 was the first time since 1929, 30, and 31 where the major stock market exchange here in the United States had 3 years of losses in a row. That bear market resulted in a correction of approximately 50%. Now, fast forward to the global financial crisis. Now I'm showing you approximately 2005 through 2008 and the beginning part of 2009. Again, the global financial crisis resulted in a major correction in the stock market, which lasted multiple years, and that correction was approaching 60%. The experiences of both of these major bear markets ultimately led to what has become known as the vertical speed indicator. Once again on the screen we have the S&P 500. However, in order to show more history, I have changed it to a monthly candle chart. So now in the top pane, for every candle that you see represents a month. So all the way on the left, you can see that the chart goes to the year 2000 and up to present day. I captured this in April of 2024. So the concept of the vertical speed indicator is I want to approach the markets with a weight of the evidence approach. There are always reasons why we should be concerned about stock market corrections and downdrafts and things of this nature. But in general, we want to use a weight of the evidence approach. And after navigating through the dot-com crisis and the global financial crisis, I decided I want to have something, a tool in my toolbox, if you will, that could help me navigate client portfolios through prolonged bear markets so we could mitigate the damage of these prolonged bear markets. That is how the vertical speed indicator got started. So what is the VSI? Quite frankly, it's nothing more than 14 different technical indicators that I'm rolling up into one composite indicator that we started calling the VSI. When 40% or fewer of these indicators suggest that it is a good environment for the stock market, that dictates to us, that tells us that we should be a little bit more defensive in our investing posture. So we implement our defensive set of rules. On the other hand, when we have 60% or more of these individual components, when they are suggesting a good environment for the stock market, that tells us that we should implement our aggressive or our offensive strategies. And then what we have done on the screen, you can see, is I've color-coded it. So when the VSI is in the danger zone, I've color-coded those candles as red. When it is in a good environment, as measured by these indicators, those candles get colored green. And when we're in between the 40 and 60% ranges, those candles get color-coded yellow. Remember, I created this VSI after having gone through both the dot-com crisis and the global financial crisis because I wanted a better tool in my toolbox that I could use to help me determine how aggressive we should be, how we should be allocating clients' assets when we have these really negative, prolonged bear markets. And if you look at that dot-com crisis and the global financial crisis, you can see those periods were incredibly detrimental to clients' portfolios, especially for those clients who are really close to retirement. That's why this got created. Now, It is also very important for me to highlight the fact that this VSI is not designed to help me pick the top and the bottom of the stock market. This is not a tool that we are using to get out of the stock market at the top, and it is not something that we're trying to use to help us get back in at the bottom. That is not what this is designed to do. Matter of fact, if we zoom in a little bit, you can see exactly what I'm talking about, because you'll see at the turns, the market begins to turn over before I get a red or a yellow light. That is designed on purpose, because when we are trend following, when we're trying to get the meat of a move, you're going to have to tolerate some movement in the stock market. What we're trying to accomplish with this is try to mitigate the damage of a prolonged bear market. That is our VSI, and that is one of the tools that we use to help us determine how we should allocate client assets. Hopefully you found this helpful. If you have any questions, by all means, feel free to reach out to me. Be happy to chat with you, whether it's about the VSI or just in general, how we manage money for our clients and families. Till next time, thanks for watching.